Looking at the Markets with David Modell.
Welcome to Looking at the Markets with David Modell. Today, my very special guest is Mr. Patrick Donnelly, president of First Mining Finance Corp. Mr. Donnelly has 20 years of experience in mineral exploration and capital markets, including at several base metal developers. He holds a Bachelor of Science in Geology honors from the University of British Columbia and has an MBA from the University of Toronto. So welcome, Mr. Donnelly, to Looking at the Markets.
Thanks for having me on, David.
Yeah, it's really a privilege to have you here. And, I wanted to talk about the markets, wanted to talk about gold, and get your thoughts on those. All right, Mr. Donnelly, let's start with the basics here. What can you tell me in a nutshell about First Mining Finance Corp?
Yeah, thanks, David. First Mining Finance was created in 2015. At the time, we were seeing record low valuations for gold equities. And we put this company together to take advantage of that market. So, we merged three private companies together. We did a reverse takeover. We got listed in April 2015. We raised $7 million Canadian. And in a 13-month period, we did 8 transactions and added 12 assets to our portfolio. So currently, we have 25 gold assets, primarily gold, in Canada, United States, and Mexico. We have 7 million ounces of gold in the ground in the measured indicated category, and 5 million ounces of gold in the inferred category. The business model of First Mining Finance is to move some of these assets forward to unlock value and de-risk them, either through drilling, economic studies, permitting, resource estimates, and down the road we'll either develop these assets or we'll sell them. And so we've collected a really high quality portfolio of assets that we think will one day be in production. These assets don't need high gold prices. We value these assets at $1,200 gold. And so again, we have a very nice portfolio of projects. We're liquid, and our chairman and founder is Keith Neumeyer, who founded First Quantum Minerals, which is now one of the largest copper producers in the world. And he also is currently the president, CEO, and founder of First Majestic Silver, which is the second largest silver producer in Mexico. So again, we have a very diverse portfolio of precious metal assets in Canada. We're moving some of those forward, unlocking value, and eventually, like I said before, we'll sell them, joint venture them, spin them out, or even put them in production and generate value for our shareholders.
I heard Mr. Ray Dalio, one of the smartest commodities investors ever, he's buying gold in a big way. In fact, I read that he recently went on a buying spree, adding 575% to his GLD holdings. He became, at that time, the 8th largest holder of GLD ever. What do you think? Is that kind of bullish stake in gold excessive, or is that a reasonable thing to do? What do you think?
I think it's a very reasonable thing to do. We're seeing right now with the global equity markets, we're seeing, all asset classes at historic highs. We're seeing it with equities, we're seeing it with real estate, we're seeing it with debt. And yet, the global cap markets are very, very frothy right now. And yet, we're seeing governments continue to pile on deficits and debt, and with no end in sight. And at some point, we're going to have a major correction, and gold is the best way to protect yourself from global headwinds. And so I think he's looking ahead and being very strategic in anticipating a lot of turbulence in the global markets. And I think it's a good way for investors to protect themselves.
I totally agree. Yeah, I mean, it's interesting how gold demand outside the United States is just so massive. In fact, I'll give you some quick facts. Chinese coin and bar demand in the last quarter hit the second highest volume on record. Gold bar and coin purchases in Turkey are almost 3 times higher than last year. Bar and coin demand in Europe rose 36% versus 2016. German demand surged by 45%. In South Korea, demand jumped 42%. How can we account for this major stockpiling of gold in countries outside of the United States?
Well, you talk about China. I was just reading an article where the head of the Bank of China, who's retiring right now, issued a very stern warning that he's got significant concerns about the amount of debt that's being piled on by that country. You're seeing in Korea concerns, obviously geopolitical concerns about the regime in North Korea. The situation in Germany, the problems in Southern Europe have not gone away. The Greece, Spain, Italy, France, the issues that were plaguing us a year or two ago have not gone away. And you've seen in Great Britain, continued instability with the Conservative government and their attempts to enact Brexit. So, we're seeing a lot of geopolitical risk globally and also economic risk globally. And, maybe, I think part of the reason is the U.S. economy seems to be improving with the Trump administration. But, the panacea of low interest rates and low cost of capital, that's coming to an end, and that's eventually going to correct. And at some point, U.S. citizens, not just U.S. citizens, Canadian citizens too, are going to realize, wow, we gotta get ready for the storm, the oncoming hurricane of global financial instability that's going to come, and the best way to deal with that is to invest in gold.
Yeah. Now, Mr. Keith Neumeyer, who is the founder of First Mining Finance, is also piling into this type of investment. In fact, I heard that he has acquired 200,000 shares of First Mining Finance Corp stock this week. That's pretty impressive, and I believe that's real belief in the stock and in gold. Now, just so people know, if they're interested in looking into First Mining Finance stock on the Toronto Stock Exchange, that's ticker symbol FF. On the U.S. OTCQX markets, that's FFMGF. And on the Frankfurt Stock Exchange, it's FMG. But as far as Mr. Neumeyer taking such a large holding in First Mining Finance Corp., would you agree that shows a real conviction on his part?
Oh, absolutely. Keith put this company together because he believes in the long-term fundamentals for gold. And the other thing, at the time we put this company together in 2015, gold equities were at record lows. And so we went out on a buying spree and did 8 transactions and added 12 assets to our portfolio. And the anticipation is that we're going to see much higher gold prices. The other thing that we're going to see is that mining companies are running out of gold. The producers, the Barricks, the Newmonts, all the big boy mining companies have not been replenishing their reserves and resources. And at some point, they got to come back in and start doing acquisitions. So we put this company together 3 years ago and took advantage of the markets that were horrible at the time and valuations were at record lows and bought ounces for less than $8 an ounce in the ground, whereas in a normal market, they'd be over $100 an ounce in the ground. And Keith is a visionary. He's done this before, where he's recognized the bottom of the market, and he has very high conviction that we're going to see much higher gold prices, and we're going to see a lot of M&A activity going forward in the gold equity space. So Keith, he always puts his money where his mouth is. He's not one of these guys who just talks. He's a man of action. And so he's gone into the market because he believes in what we're doing, and he believes that the fundamentals for gold are going to be very, very strong. I would put it, I'd state that we're going to see a perfect storm coming up for gold. In the terms, there's been very few gold discoveries. Mining companies are running out of gold, and then we're dealing with a gold world that's built on debt and global political instability. And all these things are going to come together and have a significant impact on gold prices.
Now, I've actually read that First Mining Finance is trading at a 50% discount to peer developers and 66% to M&A activity. Is that true?
Yeah, that's correct. That sounds about right.
Yeah, I mean that seems like a heck of a discount. I mean, how is that even possible?
Well, we were on the Van Eck JDXJ ETF. They had 90 million shares of First Mining, and they ran out of names to buy, and they needed to change the criteria to be included. So the maximum, largest market cap company they could take on was $2 billion, and they increased it to $3.5 billion. In order to do that, they had to rebalance the entire portfolio. So they originally had 90 million shares of FF, and they chopped that down to about 37 million shares. So last June 16th, they moved around 60 million shares in one go of FF, and so we got hit because of this excess liquidity. So it had nothing to do with what we were doing. The company is, we've hit all our guidance, we've hit all our goals. It's simply a distortion in the markets where we had this rebalance of this ETF, exchange traded fund, and since then we've just been trying to recover from that. That being said, the company's in very, very strong position. We have 25 assets, 7 million ounces measured, indicated 5 million ounces inferred. We put out a new economic study, one of our flagship assets that was very, very strong. We got tremendous liquidity. We're cashed up. We got cash for about 2 years. And so, because of this market distortion, our share price got hit, but the fundamentals of the company remain intact. And like I said, I've been very happy with the news flow we've been putting out and the goals that we achieved over the past year.
Yeah, that's exactly the type. That's exactly what I look for myself as an investor, is something that is trading at a hefty discount while the fundamentals of the company remain solid. And that's the feeling that I get from First Mining Finance, is that, we can capitalize, investors can capitalize on this disparity between, the stock price and the actual value of the company. Now, I just want to talk about something I've noticed. For me, I've seen that whenever there's an end of a bull market, or when a bull market is just getting old, as this one in the United States seems to be, this often coincides with a big move in gold stocks. For example, right now, the S&P 500 to gold ratio is 2-1. That's crazy cheap. Is this something that investors can take advantage of, you think?
Well, I think right now is the perfect timing to rotate out of some of these overvalued sectors into a sector that's highly undervalued. You look at the tech sector. A lot of the S&P is made up of companies like Facebook and Twitter, Apple, where they're trading at very high multiples to their earnings and are very overvalued. And so, right now we're seeing these frothy sectors. It's an incredible opportunity to rotate out and take your profits and put them into a sector that's, highly depressed, but poised for a major breakout. So I think, as you mentioned before, I think we're at the peak of the global capital markets. And not only that, on the debt markets, global debt markets are also very high as well. And, we're seeing now interest rates being moved up, concerns about inflation, and therefore we're going to see interest rates go up. And I think that's going to tip the balance out of the equities into the precious metal space. And so right now, I think, is a great opportunity.
I think it is a great opportunity. Now, I've noticed also that unemployment rates right now, they're very low, historically speaking. In fact, going back to Mr. Ray Dalio, he sees inflation as picking up due to better lending standards. Is this something you would agree with?
Absolutely. I mean, like I said, the Fed now is moving up interest rates, and they're tightening up monetary policy. So the cost of debt and mortgages is going to go up. The U.S. dollar is appreciating, and it'll continue to do so. And that's going to have a huge effect in the United States. It's going to have an effect on property. You're going to see people take the profits. They can't handle. They're going to take the profits from the equities, so that's going to pull back. They also have to reduce their debt, and it's also going to affect U.S. exports. If the U.S. dollar goes up because of tighter monetary policy, that's going to slow down this recovery. So, like I said, I think we've hit the top, and it's all downhill now. And because of tightening monetary policy, tightening of credit, and increase in interest rates.
I think it's as good a time as any to start getting involved as an investor with precious metals stocks, mining stocks, such as First Mining Finance Corp. And again, just to remind people, if they are interested in looking into First Mining Finance as an investment, in the United States on the OTCQX, it is ticker FFMGF. On the Toronto Stock Exchange, it's FF. And it is listed as ticker symbol FMG on the Frankfurt Stock Exchange. What I want people to do is check out First Mining Finance Corp on Twitter. The handle there is at First Mining. Now, if people wanted to contact First Mining with questions, or comments, which I certainly encourage, how can they do so?
Well, you can go to our website at www.firstminingfinance.com. And our VP of Investor Relations is Derek Iwanaka. They can also email Derek. It's derek@firstminingfinance.com if they have any questions, or they can contact me directly. I love speaking to shareholders and potential shareholders, and my email address is patrick@firstminingfinance.com.
Once again, that's patrick@firstminingfinance.com, or if they want to contact Derek, that's also fine. Derek@firstminingfinance.com. I'm also going to give the phone number if that's okay.
Absolutely.
Yeah. They have two phone numbers. They have a toll-free number, 1-844-306-8827. Or locally, that's 604-639 8824. And all of this is going to be in the description of this YouTube video, so you don't have to keep rewinding it and writing it down. You can just look in the description of this YouTube video, or contact me, davidmodell@gmail.com, and I can certainly furnish you with that information as well. All right, I've been speaking with Mr. Patrick Donnelly, president of First Mining Finance Corp. I think it's a great investment. I think people should look into it, and I hope they will. Mr. Donnelly, thank you so much for taking time out of your super busy day to speak with me. You're welcome back anytime here on Looking at the Markets.
Well, thanks very much, David. I really appreciate you giving me the opportunity to tell a bit about our story and the fact that we're a good way to play gold. We're liquid, and backed by Keith Neumeyer, who's created $2 billion companies. And the plan is to make this his $3 billion company and reward our shareholders. And I encourage your listeners to reach out to us to get more information on the company.
Absolutely. I definitely hope to keep up with First Mining Finance Corp. And you're welcome back anytime. Thank you so much today.
Thank you, David.